Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 142 for October 20th, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be analyzing your trade ideas. So you should be seeing Norman Hallett's screen right now, and he is our guest for today. And also Jim, the option professor of optionprofessor.com is moderating. So I'm going to go ahead and turn it over to him.
Okay. Hi, Norm. Very good to have you back here. And we're going to cover a lot of information, not only the stuff that you focus on with the disciplined trader, but also some of the things on the list here. Before we get started, give a little background on yourself for the people who are just meeting you for the first time.
Well, my name is Norman Hallett, and I'm old. But I'm not bad looking, and I can still dance. I actually worked for Arthur Murray's about 45 years ago. You didn't know that, Jim. I taught the initial dance lessons.
I thought that was a muni bond firm. That's not a muni bond company?
No, it's not. Arthur Murray's used to be, but then he got into dancing. He danced his way to profits. In any event, my wife keeps saying, "What else did you do? I didn't know you did that." But yes, I did. I sold. My job was to take in the free lessons and let them know. And when I was cha-chaing with a woman that was 30 years older than I was at the time, I was in college making money, and I would say, "Are you sure you don't have any Latin in you, the way you move?" And then I would continue to sell her the 12 dance package. In any event. But that's just a small part of my background. I did work for Payne Weber, another dance firm, as well as International Trading, which was one of the largest option firms in the country in the 80s before there were exchange traded options. So I've been around the block, and I'm hoping, and I think I'm hoping that I can demonstrate a little bit that, it's one thing to have 40 years experience in trading, but if you have 1 year experience 40 times, it's not going to do you much good. You got to keep learning. And right now, actually, Jim, I've never mentioned this to you. I'm focused on helping seniors to trade the futures market.
Right.
And that's something that usually doesn't come out of somebody's mouth from a compliance standpoint.
Right. Well, as long as they keep it in moderation within their parameters, right?
Right. And, but that doesn't stop people from getting too excited about situations when they arise. So, there's always an emphasis on that. But I'm going to point out a few things today that I think I'm just going to kind of talk out loud when I look at charts. Sure. Most of the stuff that I have in the stock market is long term. I don't day trade stocks, although I'll take a look at. I'll comment maybe each one that we look at, sure, on whether I see it, what I see in the short term and what I see as a portfolio hold. So that's probably the way I'll do it. It's the way I look at things for myself.
Sure, hold or get rid of, something like that.
Right, something like that. Now I've
trim.
Trim, right? Buy, hold, or sell. Yeah, trim. I think mostly I'll probably be talking. I think the market in general wants to correct. It may be one of those corrections we've seen along the last few years, but in that sense, when you have that kind of head, you look for buys, and I'll be commenting on where I see some of these things may be better buys than where they are right now. But when you do that, you always have to. I'm still waiting for my $50 Apple to be filled 15 years ago. That hit 51, but didn't go to 50 like my price. So you got to watch it right, when you're looking to buy, especially against supports, and you're asking too much out of it. So.
All right, well, why don't we jump into this list here and get the show on the road. AMD, Advanced Micro Devices, they had a big run up because Intel couldn't come up with this chip, so Taiwan Semi and AMD filled the void for this particular item, and the stocks of both of those ran through the roof. That was yesterday. Today, it's not quite as robust. What do you see here?
Well, again, I look at, I'm kind of an old school guy. I look at things like these kinds of accumulations, and what we used to do with these kinds of accumulations, Jim, and maybe you remember, is we put the point of the protractor here,
Yeah.
And then we put the pencil over here, and then we move up, which would be a little bit higher than where we've gone right here. So we wait for the breakout and we look for those as targets. But
Right.
this market looks a bit susceptible to me from a couple of standpoints. This stock, I think you can. This is a stock that I think may be available closer to the $75 level. And I've drawn these two lines here to show the top of the shoulders. That's very orderly here with a nice pointed head. I grew up with a friend of mine had a pointed head. His name was Reggie in the Bronx. So this goes out to him.
You don't see it breaking the neckline at 75, but you think it could go down and test it?
I don't, well, we'll have to wait and see, but this is the 8-bar. On most of my charts, I'm drawing the 8-bar exponential moving average. This gives me, I like the look of this, and
it keeps things on a short leash too.
Yeah, it keeps things on a short leash, and I've noticed it works better than the 8 straight moving average. The fact that you're waiting the, what I don't like about the current situation is we seem to be closing near the lows of the day in the last 2 weeks.
A lot of red bars too.
Yeah, we've got some red bars. When that happens, I mean, you've got more red than green probably through this entire head and shoulders formation. But it's held up. I want to point to right here, the RSI, and you've probably had HEMA on. This is her version of the RSI, although I hope I don't bastardize the way she looks at things. But we do know things like divergence, and this movement here in the stock was pretty easy to call. Yeah. Looking for a breakdown, this gap, and then a breakdown for all these lows. This distance here was an easy get for anybody that watched for a divergence. But the fact that we have not rebounded much, we're nowhere near the level of the last shoulder. I see weakness. So I think if you're a buyer, you can buy it in stages. I think the first time would be around 75. If you're a long-term investor, look, ADM. We're moving from the industrial age to the technological age, and we've accelerated that with COVID. So I don't see any problem with having AMD in your portfolio long term. But if you don't have it now, it's maybe a good time to hunt for $4 or $5, $6 less.
What about, can you throw up the Dow transports? Because people have plowed into UPS and FedEx and all the rails and everything. And I was noticing a divergence on the RSI. I was wondering if your work showed a divergence, because we just made another new all-time high here on the transports. And then, of course, it rolled over quite a bit.
Do you know the symbol for it?
It can vary. Is it DJTA on some systems?
It's not on this system.
No, and could it be TRAN, T-R-A-N?
Let's see.
Or I'll give you the ETF, IYT.
That one looks pretty good.
Yeah.
That's a nice looking chart right there.
Yeah.
It's a nice looking chart. However, we do have a divergence, so I'm a little bit shy.
Yeah.
You're seeing the momentum start to slip as we still make highs, but that seems to be the case for the last month and a half.
What about on a longer term chart, like a 3-year chart? See if it's more pronounced maybe.
Let's see.
Because this has been a big fuel to the rally along with, tech and growth. People have plowed into here big time.
Wow. This is the transports, huh?
Yep.
Yeah, I mean
the e-commerce, and when people buy stuff, it has to be delivered. So I think that's the moral to the story there.
Yeah, I do. I think so too. I mean, you had your dip in here. What was the cause of this, Jim?
Oh, that was the drop in March.
Right, well, that's
the COVID crisis in March and April.
Held this bottom nicely, a very orderly move up. I mean, this is a very positive view, but the run may be limited just because I just don't see the momentum. But still, you wouldn't be shorting this market right now.
No. I was just wondering if it looked like there was some kind of a divergence, and it looks like there is something. So
yeah, there is.
If it did roll over, it could have somewhat of a correction.
Right.
Next one up here is Square, the new way to work the payment systems. PayPal and Square, the new way to pay for things, I guess. And
Yeah, and
this thing went crazy on the upside. Yep.
yeah, I mean, there are so many charts that look like this,
Yeah.
over these past
6 months.
decade. And, I mean, you're looking here at above every major, the 20, the 50, the 200, which is the moving average that you see besides the 8.
Mm.
But you're not, there's nothing that seems to want to get in the way of this right now.
Mm-hmm.
I want to point out something in this RSI right here that is another can be a positive view. You can see here in this green band, this is between 80 and 90, which is overbought on most measures when you look at it. But HEMA looks at this top band as an area of resistance when a bullish market wants to correct. And she looks at this green band as an area of support in momentum when the market wants to hold on for its next move. And you can see that it's still playing between these two green lines, as opposed to the opposite, which are these two red lines, where a rally in a bear market would bring the momentum into this red range, and the support in a very oversold situation would bring a down market into this range. We're still playing in a very bullish area here, and so this is a stock one would hold.
Yeah.
Of course.
And if you wanted to enter, what do you think? Maybe 174 or 165, maybe something like that.
Yeah, I think the only technical reason, the only technical indication you would have would be somewhere in this 171 area.
Yeah.
Where we're testing this high, but I would not expect it to be broken, anytime soon. But again, we have a number of key averages that are in that area to give some traders some reason to believe that if these are broken, they'll go to the next line. But when you see this, there's too many bullish things going on in this market. I think if one were a buy, I think right around the 175 area.
And this is another one where household balance sheet, a lot of free cash flow. So the people are spending, the retail people are all out there spending, and obviously Square's taking advantage of that activity, I think.
Yeah, and anything that is, that has the future in mind,
Yeah.
anything that you can do online, and any, like what we've seen in Zoom and these kinds of things, these are.
Without any branches and all that, I mean, the profitability's got to be pretty good at some point.
Yeah, I think so too. This is a very nice chart. So whoever is looking at this, I understand we go through these charts based on volume of people asking about the chart. So there's a lot of people interested in Square. And I think if you live your own life, you see more and more people. I know when I go to, is this part of the charging, where they do the charging on the phones and so on?
I think they have many things going on, and their market was the more middle class market as opposed to the high end market. Mm-hmm. So they had a little bit of a market share that obviously there's a lot of people in, and there was some concern about defaults, when things were bad, and obviously when it looked like things were not going to be bad because they replaced the income loss by the additional funds put into the unemployment payment. Mm-hmm. The fear of default went away, and then everybody said, boom, let's get in on this thing. This thing and PayPal pretty much have a identical look to them as far as the charts.
There's one thing I did want to point out here. It's this formation right here. It's something that I've been working on for the last really 18, 19 months with, as you know, I build trading plans, and the idea of, this is a trading plan that I've called Loaded Gun that's probably been performing better than any that I can ever remember in the short term I've been working with it. And that's when you see a doji or a spinner or a couple of them in a row where the market is giving you indecision, and then has a stronger bar that moves through the 8-bar exponential moving average, and you see some sort of follow through like this. Mm-hmm. This usually leads to some sort of run, as you're seeing here. So in a couple of other charts that we'll be looking at, I kind of marked that up because
let's see if we can identify other ones with that, because that's a great setup.
Yeah, it's a great setup, and I think now sometimes let's see if I can look down here. Here's a setup right here that I would love to look at, you know, and consider it short. But look at the next part; didn't really follow through much.
No, you need the follow through.
Yeah, you need a little bit of follow through. Here's a form of it here, but you know, in some of these future charts, we'll take a look at it. What's the next symbol?
Next one up is Microsoft.
Okay, that must be this one right here. Yeah, Microsoft. You know, when I first looked at this chart, I transposed it to MFST, which is trading at 2 cents, and I thought, boy, Microsoft really took a hit. But I transposed the numbers.
Right now, garden variety pullback.
Yeah, I think so. You know, I mean, Microsoft is one, you know, is a core hold for anybody.
Right.
Although I did draw that arrow right here, which has the setup that I talked about. If you zoom in on the more recent, you can see here a similar type of thing where you have small bars and then a movement through the 8-bar exponential moving average, followed by a follow through, led to a movement lower. This is a kind of a bastardized version of the same, but right here, yesterday we had this, and you got to look around. You can't just look at this and say, hey, let's go short. Got to look around. It's you know, we've got a couple of tops here that have that we've attempted and falsely broken through or matched or whatever. But generally, there's a lot of investment at these prices when you see this. And when you have this, I think it's a pretty high probability we're going to test somewhere in the 200 level in this stock. You know, right in this area where you have the rest of the accumulation. But this is telling, I think, right here, especially against you know, the other action. I mean, we're seeing a lot. We're seeing a lot of tops, and I mean, look, we had an acceleration. We seem to be going sideways with a peak, and now we have that formation that I look for. I'm not a buyer here yet. If you're looking to buy this stock, I'd look to. I mean, it's too obvious. It's kind of obvious that it may want to test 200, but you know, again, when you trade like this, you got to be willing to miss it. But when you do get it, you get it at a nice price. So you know, anybody
it's not illegal to be on the sell side if it broke, say, 210, and then if for whatever reason it gets back above 215 to go the other way.
Right. If you're trading this on this formation, here's the way I like to trade this on a trade. What I would do is I would sell 2 positions minimum, or you know, 100 shares or 1,000 shares or 2,000 shares, whatever is your normal. Let's say you sell 1,000 shares right here. If you sell 1,000 shares right here, you measure the length of the body, because the Japanese really believe that the body is the real important thing about candlesticks. They think the wick is noise. And if you take your protractor again and measure it, that same body, the length of the body, and extend it to the direction you think it's going to go. In this case, we're looking down, and put your limit buy-in right here at half your positions. So you would be selling 1,000 shares here, let's say, putting your stop a tick or two above the formation, whichever of the 2 boxes, the 2 candles in the formation is higher. Put it a tick or 2 above that, and then take the profit on, take the scalp on the first position at an equal drop to the length of the body, and at that same point, after you do that, take your stop and move it to break even. And you'd be surprised not only how many scalps you'll take against this formation, but how many times you'll get a run. For instance, if you did it here, you would have had your scalp limit to buy here, and you would have had, now there are different ways to get out. I don't want you to go nuts trading this just from what I say, because there are certain rules to get out. Because listen, you and I know, Jim, that getting in is easy.
Yeah, right.
It's getting out, and you had a lot of opportunity here to get out. But needless to say, you would have had both the scalp and the swing position here on that. So we'll point that out, because somebody, if you're asking about Microsoft, I don't think it's a buy today. I think maybe later in the week or early next week, or something close to the 200. But I also
news. We're very news oriented right now between the stimulus and the election, so it's kind of a rough racket to be,
very. And but we're not looking at a big daily move here. I mean, we're only looking at that body is only about $5, which is not a big percentage for this stock. So you
No.
have a rare opportunity to get in a nice high volume stock on the short side and maybe pick up 10 or 15 points pretty quickly.
The next guy up here is going to be Apple.
All right, happen to have it right here. Oh, just before I get started, I just want to point out to people a couple of things. That this is the thing that I look at you see it's mostly commodities, although I have Tesla and Apple and
right.
The water stock here. It used to be American, it changed its name, now it's water. Twitter, of course. Candy is the electric car company that's very tradable. And Organovo has been hopping up well because it's a 3D bio company where they literally print out skin and other things, and it's got a little, with the whole COVID environment, they've got some advanced stuff going on. But this is what I want to point out down here. GBTX. This is Bitcoin.
Big print here today, huh?
Right. Yeah, and Bitcoin. So is was it Neil who you have on a lot? We were talking the other day. He likes the Ethereum. Thinks that there may be some upside there, but anybody looking to be in, you'll be hearing more and more about Bitcoin between now and the end of the year, and even into next year, I believe.
Right.
And therefore, that's a nice way. I mean, $13 a share, and it mimics it perfectly. You can do a lot of damage there on the positive side. Okay, Apple. There's Apple, seems to be on the right side of all the major, the 20, the 50, and the purple 200. Another terrific chart, but again, a bit susceptible in the short term. This is not the perfect combination. I like to see a lot more indecision on the spinners, but you did have a doji here, followed by no movement, and then a movement through the 8-bar that became the biggest bar of those 4 days. So there's a little reason to believe that we may be going down. Even today's positive move wasn't enough to get it back over that 8-bar exponential moving average. And so I'd be again, if I wasn't an owner and I was looking to be a buyer, I would be looking closer to the 105 level, where we're checking this new, somewhere right in this range between 100 and 105, right in that. That's going to be a range of support. But and we know that's the price it came in on after it split. I guess this was the split down over here somewhere. But again, I don't think it's a strong enough short because I look a little bit more exactness in the formation. You see this right here where you have indecision followed by even a small move up, but in comparison, I guess it's if you're comparing bodies, it's infinity bigger. But that did lead to some up movement. So I do think that there may be a little bit of downside here, but not much.
Yeah, tech and growth, there's a little bit of a crowded trade. So obviously, if there was a reason for people to grab some profits, maybe because Biden victory could mean higher capital gains tax next year, you could get some action out of that, right?
Yeah, I do think so, and I think that you're going to get a lot of action on election day, just like we had last time. Do you remember?
Right.
That was and so sometimes being out of these markets
is not a bad idea.
It's not the bad idea, and wait for it to pick a direction, because usually when it goes in that direction, it'll really mature, as it did in all of these stocks in the entire market. But if you took the first signal, as soon as it looked like Trump was going to get in, market was down 1,000 to 1,500 points, almost within a half hour, an hour, and then by the end of the day at night, it was up almost an equal amount. So. I think, for politics aside, if I'm looking at the chart, the other thing I like about this is that we're in that range where stocks play when they're bullish in general. We're topping out right at this green band. We're getting support in momentum at this green band.
Yep.
And we're almost in that green band right now. So there's probably not a whole lot of downside, at least for the next week.
Yeah, 10 or 15 bucks, you'd be lucky, right?
Yeah, I think so. I think so.
All right, next guy up is one of my favorites, DraftKings.
And here I thought it was Don King.
No,
he's not far from
DraftKings. Of course,
DraftKings.
the blooms come off the rose, but that's when you want to take a look at the buy side, when the bloom comes off the rose, right?
That's right. Well, that's right. It's off the rose, and of course, it's off the rose with that formation that we just discussed.
Yeah. Great signal.
And really, of course, this next follow through had you short. There are some, again, if you short it here, and you're going to find if you take a look at your charts, and this is part of the loaded gun trading plan, simple trading plan that I offer. And this formation right here, we sell right at the close here, and we sell again in 2 positions, whatever that means. If it's a very small account, it may be 20 shares. If it's a large account, it may be 200,000 shares, whatever. But we measure that extension, take our profit here on the first, on that first extension, and then move our stop to break even and let it ride, and then get out according to the other rules that we have, which are a little bit more complex, but not that complex. Here's another form of that that led to a downside. Here's a losing trade where you had a beautiful symbol up, but no follow through, right? So there are other safer traders who want to see a follow through after this formation. They have worked pretty well here. So this stock, listen, again, we're coming toward a big time support here.
Yeah, 40 to 35, right?
Exactly, 40 to 35, and 30 is the absolute. But there's a lot of investment in here, and I don't believe we'd be seeing much. So if you're not in it on the short side already, you've pretty much lost most of what you're going to gain. And of course, we're starting to see we'll get to an oversold condition pretty quickly. This is the lowest point we've been at.
These guys got some pretty good guys involved with them, and they got some pretty good partnerships. And these millennials, which is really the future of the country, where the money's going to be spent, they love the gaming, and they love not talking to anybody, so they can just do it on their phone. And once you start doing that stuff on your phone, you can get out of hand pretty quick. But these guys seem to have a great brand. And
I'm glad you brought this up, because this is a stock that I'm now going to take a look at. I mean, this is a big base that we're building, and it's also going to be against the 200-day moving average, and we're going to have probably a favorable look at the momentum. But more than that, in advertising, when we look for the latest in what works in advertising, we look at sports sites like this, the betting sites, and we look at the porn sites. I don't look at them. I have my assistant look at the porn sites, but we see what they do, because they're the ones with all the money, and they will tell you, what is working as far as getting people to join. And that talent in the social environment that we're in, meaning moving toward technology. This stock has a lot of fundamental stuff going for it. They know what they're doing as far as advertising. They're in a situation where where a lot of people won't be going to games for a long time,
right?
And they'll be placing their bets.
And it's a millennial bet. This is very millennial, this place. You know what I mean?
It is.
So I think it is very interesting on a bunch of different angles. Next up in the hot box is Workhorse, which I guess got into some of the trouble that Nikola got involved in, but I don't know how they panned out. Let's take a look. WKHS.
Yeah, there it is right there. That's a heck of a chart. And I guess
they got nailed because they started to question the veracity of some of their documentation, I think, something like that.
Yeah, it really looks like we're going back to 15, which is why I drew that line when I first looked at it. That's my first reaction. Yeah. This is a stock that that had its shot, and it tried again, even with our formation, you would have taken the scalp incidentally on this trade, but you would have broken even on the second trade. So you can see how that formation can really work. But failure, this is a failure, and today's action is not friendly. This is the lowest close in several weeks. This is a stock that's probably most likely headed. This is the range. When you look at your range of where you're heading, you're looking at the top of the accumulation to the bottom. But this kind of my experience is that when you make a bottom like this, test the high and then break that low, well, we're probably going to the lower part of the range, especially looking at this stock. This almost looks like a pot stock right before it crashed.
Yeah, it really does. Yeah.
But what Workhorse does, it must be, I have to take a look at it.
I'm not 100%. Obviously, I think it has something to do with maybe like Salesforce or something. I'm not sure.
If there are options on this stock, you're the options guy, but I think any kind of rally here could open up some opportunities for put options.
Throw a put on them. Well, this next one is going to take you back to your high school days when you were one of the top wrestlers in
that's
in
right.
the Bronx. And when you and Vince McMahon were hanging out, WWE.
Jim was one of the ones that, for those that don't know, I was a scholarship wrestler for the University of Cincinnati. It lasted all of 6 months until I wasn't quite the winner I was in Levittown, New York, but I started wrestling guys from Oklahoma. And I remember saying, is this guy in my weight class? This stock is I kind of like it from the standpoint that it's tradable in many ways. It acts, some stocks just act well. Yeah. And, this is the kind of stock that I look for something like the loaded gun. Now, look first down here. You're looking at, instead of playing between the green lines, we seem to be playing in the red lines. Mm-hmm. So, rallies should be sold, and you've got to wait till you come down here to take your profit. But here's that formation again, where you have a couple of small bodies, a few here of indecision. Again, I'm not looking at the wicks, and then you see a break through the 8-bar, which led to really a beautiful move, followed by a top that gave you the same indication here that that had a nice movement down, and you'll see some there aren't many false moves, but when they're false, they're small. But we just got one here. And again, it almost feels like the stock we just looked at, Workplace, whatever that was, because the only difference is this wants to hold this $38 level. But I think this is a stock that's probably better.
Norm, why do you get a red bar on an up move? Is it because it closes underneath the opening or something, or?
You shouldn't have a red bar, which is the
no, like in the April-May timeframe, there's some higher movement, but a red bar.
April-May.
Yeah, you see red, and they're
right
and
here,
they're higher, and they're higher.
Oh well, I see what you're saying. No, what I'm looking at is what's important to me is the close above the open. These bars, although they may be higher than the previous day, they're up for the day, but the open was higher than the close. The close was
and that's
lower.
what makes it a red bar.
That's what makes it a red bar. And
okay.
I find that gives me, again, I'm looking at the Japanese, the original Japanese way of looking at things, where, they felt that the only two important times of the day was, and the only two important decisions was where you got in at the end of the day and where you were willing to leave it at the end of the day. And therefore everything else is essentially noise. And so, of course, as you get more mature as a trader, you know that the wicks mean that some people are trapped in these, and if you can sense the volume during these times, you can see that a lot of people may had a grandiose idea here, and now they're not so sure. But the open of the next day down here really put them to loss, which causes more selling and so on until it exhausts itself. So there's a lot of different ways to look at it, but I do think that I do judge the open and the close. If the close is below the open, I make it a red bar.
I got you. Next guy up is Taiwan Semi, which is the Another one in addition to AMD that benefited from Intel having some problems, but it certainly looks like best of breed as far as the chart's concerned, a little bit stronger, huh?
Yeah, I mean, um,
Decision
you know,
time?
I've got some opinions about China in general. I really like the idea of not fighting what seems to be obvious, and that's China is a building world power
Right.
at a stronger pace than anybody else in the world, just from where it's coming from.
Right.
And you know, that's why I have Candy on my watch. KNDI is they're the inexpensive electric car company out of Taiwan, and I think at some point when the world or out of the mainland China, and as the world decides to now, of course, this is Taiwan and not China, but I'm being
Right.
a little bit lax with my definition, but generally the eastern part of the globe is you know, even Vietnam and all of the Thailand, they all have opportunities. But I mean, to get to this chart, you're seeing accumulation followed by a nice movement up, more accumulation, a movement up, very steady moving between the green this entire time. You know, this is a bullish market, and I wouldn't mind buying it here.
Right. It
You
does
know,
look like it's pretty firm. And of course, there's a lot of things coming up. I wonder what you want to put up NVIDIA and NVDA, because
yeah,
that's supposedly got all the console business. Sony's coming out with a new PlayStation. It's supposed to be a big year for these guys.
yeah, oh,
Maybe
yeah.
it's already been priced in. Who knows? Yeah.
Yeah, that's another one. Of course, you know, you've got to be shy about jumping in on this one right here when you think you could get it around 500 as it tests this this area here at the least. But again, you're getting a capacitized form of what we talked about, but still is not really a signal that I like, a loaded gun signal that I mentioned. This is, but you are getting a turn. You've got to check at a high. This looked like exhaustion, but we quickly went sideways and then approached that high again with a failure here. I mean, the big trade would be a break of this area if we do get a serious correction in the stock market. But this is a strong stock. And again, look, we're playing.
Is that a divergence, or is it too early to tell
Uh,
on the RSI?
it is a divergence, although, well, it's not a divergence from the standpoint that this is a higher high and you've got a higher here. So no, it's not a divergence.
No.
Then maybe you could argue something in here is a divergence, but I think I'm more impressed with its ability to hold its momentum all along the way. I mean, we have not breached this band except for right here. And that was it. And ever since then, the market sense has changed for this stock, as you know. And now we've gone 2.5, almost 3 times what we were before. So amazing stock.
This has been, really a dynamite stock. Next up here is ILMN. ILMN.
Okay.
Probably Illumina, isn't it?
Luminana. I think that's.
Yeah, Illumina.
I think it must be a light bulb company. But if you look just to do a little teaching here, here's that formation here that we like. That if you monitor it would have led you to something nice here. Here, but now we're starting to see some action. The larger the formation, the more true it can be in many cases. In this case, you would have sold 2 here, scalped your first one here, and got out of your second one in this area. So and then this, you know, what we're looking at is the beginning of a downtrend if you don't watch it, because I mean, this is a perfect trend line here. I usually draw my trend lines body to body, but actually I do both because I know others are counting, you know, the height of the wicks. So, you know, we're right on line here for a correction. We've got lower lows, lower highs, lower lows, and you know, this again, this signal here. You know, we just need another big down day to start calling for 260 on this stock. And if you look down here, we played around in nonsense area, but now all of a sudden, where we seem to be, momentum seems to be stopping at what HEMA believes are areas that you should watch to maybe get short. And more recently, we have confined ourselves to the red bands in these more violent moves. And therefore, I would be a seller here. I mean, if you hold this for the long term, I'm not sure what Illumina does. But
I think it's a tech stock of some type.
Yeah, you know, I'd be careful with this stock. I mean, this is the first one that I've seen. I don't like this. Jim.
What gaps down goes down.
About. Yeah, and we can talk about, this was an attempt to fill that gap. And it may have, if you count this part of the gap, if you count those bottoms of the wicks, if you don't count this as the gap, if you count this area here. So I don't see a need to fill that gap. I think we're heading lower here if I had to make an opinion based on the momentum structure and the formation that we're starting to see. We're starting to see the repeat of this formation that to me shows more downside. So
this next one, 3M, it might be a part of the recovery once the economy opens up and there's a vaccine, because this thing used to be at 260, dropped down to 120. Now it's trading at 170 MMM.
Yeah, I'm looking at it here, and
this could be something with a lot of potential if it's really going to benefit from the reopening and the vaccine, which is the next two major things people are looking for.
Yeah, I wrote down here my first. We may be nearing a top, although we may not be. This is a chart that you need to be patient with, because you know, we've got an accumulation between 150 and 170 that's pretty tight. There's a lot of interest in here. This is where I'd be sharpening my protractor, because if we do head higher and take out this high here, was this the all-time high?
No, the all-time high is at 260 back in like 1819.
Oh, I see. That's really excellent. So I don't have a chart that goes back that far. But, is that the year 1819?
No, 2018. Yeah,
2018.
A lot of things.
1819.
A lot of things topped out in the fourth quarter of 2018, and then we had that big tank job.
You know, but I think if you're a student of definition, that we're still. I mean, look at this. We're still at higher highs primarily and higher lows. We're still in an uptrend. Yeah. I think, you know, we're not seeing. You notice how we're going back and forth between the green and the red, but not the right green and the red. So even the momentum is undecided where it wants to be. When we start spiraling around the 50% line, as we've been doing. The chart has been very consistent. I think you got to be patient, and you know, I think option players. Well, I don't know what if you wait for the breakout, but you know, I mean, putting your orders to buy on a breakout or sell on a breakdown. This is one of those stocks that could go one way or the other based on who gets elected. I'd be interested to see what happens.
Yeah, it's more like I say. I think more of a recovery trade. But my 20-year graph. 160 was a 15 moving average, so you're above it. 177 is the 30, so that would be nice to get above that. And then 190 is where the longer term averages come in. So between here and 190, which is basically a 20-point window, I think the longer it can hold its water, I think the better off this thing does. You know. Yeah,
I mean, you'd be crazy to short it right now, and I think you'd be a buyer with a certain degree of confidence. But again, I think there's more exciting stuff going around.
Yeah, no, this is going to be, like you say, this would be one you'd put away. And as long as it stayed above 150, you'd stick with it. And then hopefully you'd wake up in 6 or 12 months and the world has changed to the good. And now we can start going towards numbers that it used to trade at, which is way above 200.
Yeah, this is like it reminds me, I don't have it in front of me, like a Johnson & Johnson stock here. About 4 or 5 years ago, where it was trading in the 70s and 80s, and all of a sudden you wake up 5 or 6 years later and it's trading at 150, 160. So this is it's positive.
It's another one that's kind of trying to get it going now is General Motors, GM.
Mhm.
You can see that also has, you know, tried to shake off its negativity and is trying to get going, huh?
Yeah, well, this stock looks pretty nice right now. This is GM.
Yeah.
Uh,
So
yeah, it's got
I
a
don't know
nice
that
look.
3M is going to be GM, but it rhymes.
No,
I don't know.
no. Now that you got it, let me look at Ford. That's one that I used to trade, and it's, you know, it's building.
Yeah.
You know, it's got that formation that we looked at that's still
Yep.
running. So
Yeah, you got a signal to get in there above 650, and then bam.
yeah, and then it's been doing
On a
nice.
percentage basis, it's already made a pretty good move, huh?
Absolutely, yeah, and it's, you know, here it's fighting this high here, but we'll have to see. This is a jump high, which is kind of interesting. Usually that has a lot more power. People do that a lot of, but you know, there's going to be the neurotics that are looking at this gap here, and looking for that to be filled. But we'll see. Let's do one more.
Yeah. Out of all of them left, why don't we look at BABA?
You know,
Because,
again, one of
you
the
know, I don't
Chinese
know.
stocks that are just relentless. I mean, this is a relentless stock, but
I mean, they got the whole thing cornered over there, and it's you know, it's combination of Amazon and Google, I guess. I don't know.
yeah, and I think it's, you know, it's almost Amazon. It's not in an early stage, but in an earlier stage, I think.
Yeah.
You know, to see this stock at 1,000, you know, 5 years from now would not surprise me. But you know, I know I buy from Ali. I know I buy AliExpress. If you've never been to AliExpress, that's where I got my N95 face masks. But just about anything that you buy, you can get a onesie. People who sell on Amazon, they buy from Alibaba in you know, 10,000 units at a time. This is where they're all buying it. So, and AliExpress is the site that the overruns, I guess, go, and you know, they run 20,000 and have 500 left and sell them one at a time at Alibaba. But still, you get great prices. So this is a stock that should continue to grow. I mean, anytime you see correction here, I think you got to be a buyer here.
Yeah, they're not going away.
Yeah, and look at how it's playing in the momentum. In fact, it's very much under control. I mean, it never really gets, it doesn't touch, you know, it never gets very oversold, and it's got a very, very strong base there in that 40 to 50 area, EMA's area. So nice.
All right, well, let's switch gears and go over the stuff that you're focused on and give the people a little bit of a viewpoint on what they could get when they go with you.
Let me just show you. Let's see if I think I. Well, that's my. Here's something that I've been trading off. This is I've been building trading plans. The one that I've been running data on lately is this loaded gun, and this is the gold and the micro S&P for the very small accounts. Again, so I've been focusing in this trading plan on seniors, so because there's so much volume in the micros, whether it's gold, the 1/10 every tick is, every dollar is $10, not $100 in gold. So you can take a couple of those positions.
Less leverage.
Yes, less leverage, but still enough to, you know, you can't sleep on this either, because when you got 40 or 50 point moves in the Dow on a daily basis,
right.
But I was, and this is probably, it's not inappropriate, but this is the 2-minute chart, which I find a lot of day traders trade. I don't. I trade more the 5 or 10, but these are those formations that I talked about before, where you have the doji or spinner followed by a dramatic move through the 8-bar, and all these arrows just shows. Here's another one here that led to a movement down. Here's another one here, doji, movement lower. So you know, in general, a retired person looking for, you know, a few $100s extra a week with a $5,000 account or a $10,000 account can move, can be trading based on this trigger, and have a considerable success. And I've been having meetings with everybody that owns it, and we're sharing our successes. It's been quite dramatic. Let me look a little bit at the S&P. There's really not much to say. This is the daily chart of the S&P. You can see we're still playing between the greens, so we're more bullish, I think, momentum-wise than bearish. But you know, we've got a double top. We've got, you know, who knows? It's always up to the election. But
right.
This is not a market that you can that you can not be anticipating another, you know, 5 to 10% drop. On the other hand, you can't be bailing out of everything because.
And Mike Wilson over at Morgan Stanley was calling for that yesterday, I think.
What's that, bailing out?
No, a 10% drop.
Oh, 10% drop? And I think he may have, he may be, you know, I'm looking for more of a serious drop. Let me look at the weekly here.
And then Kalanovic over at JP Morgan was on today saying that he still thinks overall the market is constructive, and he's looking more towards 3,600, but
yeah, I've got to see.
Maybe not immediately, you know.
Yeah, I mean, I'm, you know, listen, it's still a bull market from a longer term perspective. But again, you know, we're seeing some things that, you know, we're hanging around here now at the high, you know, from what was looking in the bullish area between these two green lines, and now has not advanced above the bear resistance zone, which HEMA calls it, and therefore it's not a thing to move, but it's something to kind of influence what you want to look at. And if you have if we have a big down day, especially on the Friday, we could see some downside. We could see that 5 or 10% pretty quickly. I mean, look what happened here. This is the, I mean, you wouldn't want to take this trade unless you had $1 million account, but this is the signal that we're talking about. Spinners followed by a dramatic move. Take your protractor, get out a half down here, and move the rest to break even. And look at this. Look at that, Jim.
Yeah.
Doji or spinner followed by our move through, and you would have had this entire move with that move. So I want to impress on people the importance of this formation against the right moving average. And I think if I can cheat a little bit, let me share this with you. If you go to simpletradingplans.com, simpletradingplans.com, you'll see, you know, these are case studies, and here's some of the more of the charts that I was showing you. But simpletradingplans.com, I've made it exclusively now for this loaded gun trading plan. And if you're interested, you know, feel free to give it a try for 60 days. It's normally $497, but, and I've thrown in this bonus last week for a group, and I haven't taken it down yet, where you'll get a 30-minute one-on-one with me, and we'll work individually, and I'll show you, you know, after you look at all the simple videos on it, which only take you 2 or 3 hours to watch all of them. You got any questions? Just book a session with me, and I'll take you through it as a bonus. You've got 60 days. I don't ask why you want your money back, because I don't think you're going to want it. And put in this code, 100 STP, 100 STP. When you put that code in and press apply the code, you're going to get $100 off, and for you it's going to be $397, not $497, if you want to give this a try. So, you know, it was originally built for everybody, but the more I started using it and showing it to some of my senior friends, because I'm a senior myself, the more they started working with this, and we're just so impressed with how it keeps, you know, because older, you know, retired people, we need to keep our losses small, you know, and let it run. But then again, you don't want to be the person that had the short gain and didn't take it. So the way I've described this to you, where you're taking a scalp on half and letting it run, this gives you best of both worlds, so that you can keep your mental state in check. You're not beating yourself up because you're taking some on the short, you're letting some other ones ride. You're doing a little bit of vote in a very tight, safe type of a trading plan. So I just wanted to make sure I offered that to everybody, because I'm not going to offer this for long. I'm certainly not going to offer the bonus for very long because I can't do one-on-ones. I just finished a group coaching series, and so I've got some time slots. That's why I left this open. So if you'd like to take advantage today of that, I put this up for a day, the coupon code 100 STP, if you want to take advantage of it. So anyway, that's kind of my pitch. If you're interested in seeing, experimenting with some of the stuff that I do in sim and then watching it work, I think you've seen it on most of the charts, and I don't really even use it on stock charts except for in general, when to buy and when to sell for the long term. But I don't day trade that. I do that with commodities. And we just had a big run in corn. Look at this run. I know that you look at commodities every once in a while, but look at, this was a signal I gave everybody.
Mm-hmm.
And actually, it wasn't this signal, it was this one. This was the perfect signal because you had the doji followed by the movement higher, taking out a series of highs against the double bottom. This had a lot of things going for it against the bullish support zone, if that was going to happen. And it wound up giving you a huge trade right here. And then when it knocked you out, it got you right back in here. So this is a market, I think that's also good for seniors because it's a very small market. But you got to watch it because look, it can move. So always under trade, always take on less trades than you're capable of trading. So those are some of the markets that I'm looking at.
Yeah, some of the commodities definitely are showing a lot of signs of life. And there's some people who think 2021, we're going to get a lot of volatility in those commodities as inflation comes back a little bit. The demand supply bottleneck is going to happen, when we reopen and things like that. So there is, and then of course, an inflation pop would also be helpful to some of these things as well, right?
Absolutely. And this is a confusing looking chart. If you look at it as a whole, this is the euro dollar, and it's been trying to find its way. But looking at the loaded gun, and why I called it loaded gun is it looks here like the handle of a gun with this more looks like a rifle, with a long barrel. But this would have taken you into it and stop, and then here it is again on the. This is a better trade because the risk is very short.
Right.
You still get a run. But you gotta watch it. Here's a losing trade, and when you lose, you're going to lose some. So be very careful. Here's another short signal taking out a bunch of highs coming down. Here's another long. We're in the middle of a long signal here in the euro dollar. Well, you would have already gotten your first one out, and you would have now you're running a free trade, and you have your stop at break even. So, the currencies. I think those that trade stocks, I always encourage them. Take a look at currencies. Take a look at some of the expand your horizons. And those who are in currencies, I don't think they know how fast stocks can move, especially in your field, options, because. I've always been a futures guy because it's an exact science. I know exactly what something is worth and what my risk is.
Right.
In options, although there is some safety and time and so on, there are so many times where a market can move in your favor and hardly affect the premium, which can make you think, why am I even doing this?
With the stock options, you can use them for hedging and a whole bunch of different things and selling puts to accumulate. So if you have the whole basket of techniques, the option thing can be very good because you can pick out the one that's most probable basis to set up.
Absolutely. And the guys on the tennis court say, "Well, come on, Norman, give me a hot stock. Give me a hot stock." I said, "Just write covered calls. What are you worried about?" I mean, write covered calls. Put your stop in. Underneath the protective premium, and you're not going to be able to lose. Just do it. All
right. Well, Norm, is there a website you're going to direct them to right now as well?
Yeah, I do want you to go to the Loaded Gun site, which is simpletradingplans.com. Here it is, simpletradingplans.com. And, vote on the best picture of me. I think there's 2 or 3 pictures. Here's one I think you'll like. I don't know if that's one that I wish I'd get my money back. That was a big thing. I did at Trump Tower right here in Miami. And there's you, Jim.
That's right. Just after I got your book, I got your book in the mail, and that's how I felt.
Appreciate
All right.
that.
Well, Norm, it's always fabulous to have you here. I hope everybody takes advantage of this because obviously Norm brings an awful lot to the table. And you can contact him at the simpletradingplans.com and get started. Get planning now for 2021, which will be here before we know it. And there's a lot of opportunity next year. So now's a good time to plant your seeds. For Option Professor, we have a weekly market update that we send out free of charge. You simply go to optionprofessor.com and put your information in, and you'll find out all the stuff that we're watching week in and week out. And we've been very, very accurate on a lot of the things we've talked about. So it's been very valuable. And again, free of charge ain't bad either. So right now I'm turning it back over to David. Thanks, Norm. We'll talk again soon.
Thank you. Always a pleasure, Jim. Be well, my friend.
Thank you.
All right, thanks guys. Great show today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app or network. And you can also go to TimingResearch.com to get access to the archive of this show as soon as I can get it posted, or any of the previous shows. Also, be sure to mark your calendar for this Thursday. That'll be October 22nd, 10 a.m. Eastern Time. We're doing another one of our all-day events. I have eight presenters scheduled that will be talking about VIX and news event related trading. So yeah, so that'll be 8 hours starting at 10 a.m. on Thursday, and you can always get access to the live events by going to TimingResearch.com/live. So be sure to join us for that.
That's the most exciting. That's the most exciting I've ever heard you sound, David. Really bringing your voice up on that. Wow.
Yeah. Yeah. Well, you know, I get good people with good personalities to be presenters,
Yes,
I handle the behind the scenes stuff, the
You're a
technical issues.
techie. You're a techie.
Yeah,
Come on.
yeah, I'm a computer nerd, and so that's my skill. But so it was great to have Norman back today. Norman Hallett of thedisciplinedtrader.com and simpletradingplans.com. So thank you for being here again for today's show.
Thank you.
And of course, Jim, the Option Professor of optionprofessor.com as moderator. So thanks, everyone.